Hi, this is Priyanka from Goldstone Finvest. Time for daily updates. Today, the Nifty opened lower and remained in a tight bear grip for the entire session, leading to a sell-off across sectors amid rising COVID-19 cases in the country and weak global cues. Today was a bad day for the market. The breadth of the market was extremely poor. About two-thirds of the listed stocks were down, as well as sectorial indices closed in negative territory. Nifty closed lower at 14,549 and Sensex closed lower at 14,180. Indian markets witnessed across-the-board selling amidst high volatility owing to weak global cues and spike in COVID cases. All sectors bearing pharma witnessed selling as second and third wave infections in India and Europe respectively are bound to hamper economic recovery. Reports of a potential tax hike in the US also impacted the market sentiment. Nifty is close to 14,468, which is the make or break level for the near term. Fall with lower volume suggests that bottom fishers are staying away while sellers are hopeful of a bounce in the near term. On rises, 14,638 could provide resistance. Indian benchmark indices fell the most in a month. Nifty opened gap down and fell in the morning session. A second bout of selling happened post-noon around 1:40 p.m. and the Nifty closed almost at its intraday low. At close, Nifty index fell by 1.8% to the end of 14,549. The index has fallen to its lowest in the nearly 2 months. The Nifty has failed the setup of higher lows of the last two trading sessions and broken its 50 DEMA. Weakness swept across the street and finally index settled the day with losses of more than 250 points. Thus, it can be summarized that the market ended near a 1-month low amid weak global cues and concerns regarding a second wave of COVID-19 infections in India. At close, the Sensex was down by almost 871 points at 49,180 and the Nifty was down by almost 265 points at 14,549. Bulls disappointed as Nifty has given up all the gains witnessed in the last Tuesday's session with a gap down opening, perhaps owing to weak global cues. Hence, in the next trading session, if the index trades below 14,561 levels for at least 30 minutes, then the weakness may initially extend towards 14,455 levels, which seems to be critical short-term support. The support range of 14,750 was disrespected and we dropped over 200 points once the level broke. Keeping a stop loss of 14,900, traders can target 14,350 to 14,400 as a potential target for the index. Until we do not get past 14,900, the short to medium term trend remains bearish. The index has formed a bearish candle on the daily chart with a closing lower than opening levels. Experts feel the index has to hold the crucial support level of 14,455 to avoid sharp selling pressure in the coming days. Nifty index opened negative and remained under pressure for the entire day as every small bounce was being sold. It has failed the setup of higher lows of the last two trading sessions and broke its 50 DEMA. If bulls fail to hold on to the support zone, then it will eventually lead to the test of recent corrective swing low placed around 14,350 levels. After consolidations for the last few days, India VIX rose sharply by 8.69%. Options data indicated a low trading range for the Nifty could be around 14,350 to 14,800 levels. On the option front, maximum put option index is at 14,000 followed by 14,500 strike, while maximum call option index is at 15,000 followed by 15,300 strike. Call writing is seen at 14,700 then 14,600 strike, while marginal put writing is seen at 14,300 then 14,350 strike. Option data suggests a low trading range in between 14,350 to 14,800 zones. Bank Nifty opened gap down at 33,894 levels and continued its weakness till the end of session to hit a day's low of 33,203. It has been underperforming the broader index over the past few sessions, hitting a hurdle of its 50 DEMA over the last 4 trading sessions. Among sectors, Nifty Metal and PSU Bank indices slipped 3% each, while Nifty Auto and Nifty Bank shared over 2% each. BSE Mid Cap and Small Cap indices shared over 1.5% each. All the S&P BSE sectorial indices ended in the red, with Auto, Bank, Capital Goods, Metal and Realty indices slipped 2% each. What experts suggest investors to do tomorrow? Bearers took charge in today's session as Nifty index ended with a sharp cut of nearly 2%. Weak global cues combined with the news of new mutant of the COVID-19 in India spooked participants. The broader markets too witnessed sell-off as both mid-cap and small-cap indices ended with a loss of almost 1.7% and 1.6% respectively. On the sector front, all indices ended in the red, wherein metal, auto and banking were the top losers. Though we have not seen any major correction in the benchmark yet, the uneasiness is certainly increasing with the rapid increase in the COVID cases. Besides, global cues are also mixed. We are hoping for some respite from the banking front, but it failed to build on the previous sessions again. Put together, indications are now pointing towards further slide in the index, while volatility is likely to remain high due to the scheduled expiry of the March month contracts. We reiterate our bearish yet cautious view and suggest maintaining positions on both the sides. The Nifty needs to cross and hold above 14,675 zones to witness an up move towards 14,800 and 14,900 zones, while on the downside, immediate support exists at 14,450 then 14,350 zones. As stated by Goldstone expert, a trader should trade extremely cautiously with strict stop losses and levels provided on our YouTube and Telegram channels. Experts suggest that tomorrow the market is likely to be in a terminal phase. Follow support and resistance level along with trading calls as published on our Telegram channel. For regular updates, like, share and subscribe to our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Be a part of Goldstone family on Facebook. Views by Goldstone Finvest. Let's build fortune together.